We'll start the meeting. Today's recommendations. First, we have Kotak Mahindra Bank. Current market price is 2,176. We are giving a first target of 2,400. Kotak Bank is the third largest private bank in the country after HDFC and ICICI. If you look, comparing to HDFC and ICICI, if you look, Kotak has a better CASA ratio and net interest margin. But if you look at their stock for the past 3 years, it has been very, not really moving much. So one of the reasons for this is that if you look at the growth rate, Kotak grows very conservatively. They are very conservative about their loan book. They are not concerned about growing their balance sheet very aggressively compared to the other two. And one more reason is that if you look at the subsidiaries, HDFC and ICICI has very strong subsidiaries, like their insurance, AMCs. So when you have a very strong subsidiary, naturally the parent's valuation will get boosted. But if you look at the core numbers of the company, financially the company is doing very well. Their loan book, net interest margin, CASA ratios are all very decent. Actually better than ICICI and HDFC. Now recently RBI has cut rate of 25 basis point during the last monetary policy meeting. From 5.5 it is right now at 5.25%. So this will naturally help all the banks. They will be able to lend more. Apart from that, earlier during the year, cash reserve ratio was cut by 100 basis point, 1%. So this cash reserve ratio means that the amount of money that banks can release will get improved if it is cut. So this was not done. This cannot be done the day it was cut. They said that it will be done in tranches, in 3 or 4 tranches. So November 29th was the last day of the tranche removal. So now after this, the cash release is complete right now. So we'll be expecting them to give much more loan in terms of numbers for the next quarters. Next we have Hindalco. I'll speak about Hindalco and National Aluminium together. Hindalco first target current market price is 852. First target is 950. National Aluminium current market price is 278 and first target is 310. Hindalco is the largest aluminium producer in the country. It is backed by Birla. National Aluminium is a public sector company. Both of them are mainly into aluminium. They are aluminium producers. They are fully integrated aluminium producers. That means they have all the way from mining to smelting, producing and even selling. They are completely integrated that way. But if you look at Hindalco, they have a strong subsidiary called in US. So around 60% of their revenue is coming from them. One difference between Hindalco and Nalco is Hindalco is having value-added products. Apart from aluminium production, they also make aluminium sheets which are mainly used across EV, beverage, all these Pepsi cans, foils, all these are done by them. So because of that, they will naturally have little more better margin. Hindalco is also into copper production. National Aluminium is completely into aluminium only. And now recently, as most of you have noticed, most of the metal stocks are just going up. Metal prices are just rising. The truth is no one really knows to where it will rise, to what point it will rise. If it is caused by the real supply shortage in the market, or is it speculative? That Karthik sir will speak more on that later. But there is an uptrend. If you look across silver, gold, aluminium, even copper have recently hit very high. So this is one of the main rationale we are recommending both these metal stocks. Even in terms of debt, Hindalco's debt is reduced. Company-wise, both are very good. And next we have Astra Microwave. Current market price is 907. First target is 1010. They are mainly into production of microwave and microwave-related products across defense sectors. These products are mainly used in telecommunications, defense, and also meteorology departments. Their current order book is around 1,900 crores. The company, if you look past 3 years, their top line and bottom line has been good. But one area of concern for us is that their cash flow is not that strong. They have more cash tied up in their inventory. Even if you look at their accounting net profit and all that, even if profit is there, if you look at their cash flow, money has not really reached them yet. This is mainly the nature of many companies that are heavily dependent on orders from government. You will get the order, but by the time payment comes, it will take little time. So this is the reason. Apart from that, if you look last 1 month, defense companies have heavily corrected. I think it was particularly last 1.5 weeks. Most defense companies, GRSC, Cochin, BEL, all these have corrected. So Looking at Astra Micro now, PE is still little high, but those who are interested, it is reasonable. And finally, we have Shriram Finance. First current market price is 848. First target is 950. It is an NBFC, non-banking finance company. What sets them apart from other NBFCs like Tata Capital and Bajaj Finance is that if you look at their loan book, it is mostly focused on vehicle loans. Bajaj and Tata, they are diversified across many loan books. They are mostly vehicle loan focused NBFC. Now, when we looked at now recent GST cut has happened, which was good for most of the auto companies. And even when you're looking at the last 2 months auto sales, it has been very good. Most of the new companies, no, not new company, most of these Tata, Mahindra, they've all started releasing their new models and their demand also seems to be good. So because of this, we are expecting that this company will largely benefit. Even I think the stock is also near its all-time high now, yes. But still, we are expecting next 2 quarters to be good. Even the rate cut that I had mentioned, it will benefit them in an indirect way. Most of these NBFCs, how they raise money is they will issue convertible debentures, mostly in CDs. So through this, they can now issue a loan at a cheaper rate because rate has been cut. So this is also one more small advantage they have. Looking at last month's review, Nifty gave a return of 2.8, ours gave a return of 1.9. Mainly, although Nifty has, I think after our last meeting, Nifty hit all-time high. Since then, it has corrected very heavily. Even though Nifty last 3 days it has come back up, mid caps and small caps are still bleeding very heavily. So we are still awaiting some recovery in those. Hindustan Petroleum, as we said, we gave it more as a dividend yield stock, so it will be still range bound. Otherwise, Canfin Homes, Sundaram Finance, almost range bound. VSSL also no particular news, just stay there. Only Kenna Metal has achieved the target. And based on last 2-3 meetings, many have been requesting us to do an IPO review. So we thought that now when we are looking, only ICICI is the one that is upcoming. So we thought we will speak about that. So this is ICICI Prudential Asset Management, subsidiary of ICICI Bank. Their issue size is 10,603 crores. It is a big issue that is coming. IPO is completely over for sale. That means that they are not putting the money that we are giving for the IPO, they are not putting anything back into the business. The promoters are taking it home completely. Issue date is 12th, it has started and it is ending on 16th December. Price range is 2,165. That means you will be getting 6 shares. Face value is 1. Speaking of the company, they are the second largest AMC in the country. Asset management companies, they are mainly into the business of mutual fund, asset management, PMS, alternate investment funds. The largest in the country is SBI Capital. They are not publicly listed. They are the second largest. If you want to compare one peer to compare would be HDFC AMC. If you look at PE, okay, we are not given PE here. ICICI Prudential's pre-IPO PE is around 38 and HDFC is currently trading at around 40. So it is reasonable. It is in line with what a similar company would trade in the market right now. Don't expect too much listing gain in this, but for a long term, this is a good company. Again, when it comes to listing gains, we cannot really give a comment clearly because that depends the market that time. But if you speak about the company is very strong. Their AUMs have grown very decently past 3-4 years. And if the stock market is doing well, this is a type of company that will naturally do well. It will go in line with the stock market. So for a long term, this is very good. Especially people who don't have stocks like HDFC, AMC or Nippon, this is a very good option. Yeah, thank you.